Hi, I'm Terry McGivern, Fund Manager for the AJ Bell Funds, and it's my pleasure to join you today to take you through some of the major market moves, our fund positioning, and how this drove performance in the fund range over the second quarter of 2019. Keeping up the trend that we saw in the first 3 months of the year, major stock markets were able to take a raft of negative political headlines in their stride to post a positive performance for a second quarter running. Those gains were boosted for investors in the UK by the continued weakness of the British pound, which has fallen amid uncertainty around politics, the new PM, and the ongoing deal or no deal Brexit situation. The best performing market in the quarter was Europe, up almost 10%, as poor economic data and continued concerns around Italy's position in the euro were overridden by the prospects of yet more support from the European Central Bank. Close on the heels of Europe and continuing its bounce back from the fall seen around Christmas time, technology stocks were the next best performer, up almost 9%, as trade wars and threats of regulation were shaking off by the market. Elsewhere, the US also had a strong spell in the second quarter, posting attractive gains of around 6%, whilst UK, emerging markets, Asia Pacific and Japanese stocks also managed positive returns, albeit to a lesser extent than their other global peers. In other areas, bond markets enjoyed a strong second quarter, with good gains seen in global high yield, emerging markets, and developed government and corporate bonds, which, given our decision earlier in the year to move some of the fund holdings out of UK bonds into a more international mix, was helpful for performance. The team remain of the opinion that UK government bonds are extremely overvalued relative to history, and this is why the AJ Bell funds are invested in bonds of shorter maturities. This stance did weigh on performance a little, with better returns seen in the longer maturity UK government bonds, but the team believe that our current positioning remains the correct one over the longer term. Lastly, UK commercial property had a somewhat indifferent quarter, with UK listed property funds known as REITs down overall, whilst property funds run by active managers in the main showed small positive returns. In our fund range, we combine a REIT ETF with holdings of inflation-protected government bonds to remove some of the extra price variation seen within REITs. This approach helped insulate the funds from the worst of the falls seen in the sector, meaning the funds saw a broadly neutral return from holdings in this asset class. We were pleased that all funds showed a positive return over the second quarter. The higher risk, adventurous and global growth funds, which are mostly made up of shares, performed the strongest, but we were also pleased that our bond positions also had a good quarter, meaning the other funds also posted solid returns too. Having updated the mix of holdings in our funds this February, we were happy to leave things as they were this quarter, whilst closely watching performance and the markets in the meantime. One notable change this quarter, though, was the arrival of our income fund range. The AJ Bell Income Fund and our AJ Bell Income and Growth Fund launched in April 2019 to a good reception and are so far performing in line with their expectations. The Income Fund aims to deliver an income of around 4% per year and hold its value fairly constant, whilst the Income and Growth Fund aims to deliver an income of around 4% a year, whilst also growing its value over and above inflation, as measured by the Consumer Price Index. Both funds have the option of paying out income monthly or automatically investing it back into the fund. After an encouraging first quarter of 2019, it was pleasing to see all funds in the range again showing positive returns, despite a number of challenges facing financial markets. Performance has been robust across all regions, and all holdings within the funds have risen in unison. History tells us this happy state of affairs is unlikely to last forever, of course, and the team are committed to continuously monitoring global market developments. We're ready to adjust the funds if we see signs of market weakness or threats to the long-term prospects of the global economy, which we think could harm our returns. AJ Bell do not offer advice, so we would urge you to do your own research to ensure any investment you select is appropriate for your financial circumstances and objectives, and in line with your attitude to risk. If you are unsure about this, please contact a suitably qualified financial advisor. Thank you for watching.